2019, and it's 9:30 a.m. in London when we're doing this market update. I hope you guys had a good weekend. Let's take a look at the markets now. It's been a very volatile start, especially for gold and dollar yen. But in particular for gold here, which is down with about 1.5% really since Friday's close. So I think you pretty much know what's going on here, right? Got the G20 meeting over the weekend, and then on Sunday, President Trump met the chairman of the North Korean Republic, Kim Jong-un. So obviously, people a bit excited about the situation here, and sort of maybe we gonna get de-escalation there, which is always good. As you might remember, has driven markets in the past, and that's sort of causing gold to go down as well. The S&P 500 is actually up, trading at a new sort of record level, and it's going to be interesting to see, right? So this is just the political thing, and obviously politics sort of forms economies and so on and so on. So it's definitely important, but then we have the effects of past politics, how that can influence economic data, and that is what we kind of see in just this afternoon, in about 6 hours from now, 6.5 hours from now, at 3 p.m. London time. Sorry, 5.5 hours from now. Because what's going to happen here is that we're going to see the ISM figures out, and the economists are anticipating a bit of a slowdown. And what's that, 52 point something last month? People anticipate to go down to almost below 50, so 50 and a half or so. I don't know the exact number on top of my head. But what people also think, not everyone of course, but they think that in the next few months the ISM is going to go below 50. So it's a bit weird that stock markets are where they are, and then the stock markets are where they are, and the ISM numbers are where they are. And then later this week we have the NFPs by the end of the month, or sorry, by the end of the week, which is obviously going to give even more color here. So we'll see what happens. It could technically just be a very, very good, I mean, I think at least, that it can be a very, very good opportunity to actually, it could potentially be a very, very good opportunity to buy gold. And the breakout in the S&P 500 could be sort of a massive bear trap. We would just need to see what happens. And the first clue, if it is, could potentially be this afternoon. Now, let's take a look at some more specifics, and we're going to begin with the euro versus the USD. So the euro versus the USD, as you might remember, the idea here was that the market was supposed to bottom out pretty much here around 113.44 and 127, 112.78. So we're still in that buy zone. So there's no real change to the outlook here for this market, and I'm going to remain bullish. Obviously, if we trade below 12.78, we'll be back into this wedge, and the market can probably go down to 112, and then we'll see what happens. But it's going to be more sideways price action, unfortunately, if this were to happen. So no change to the outlook here. Here's the GBP versus the USD, where the market is trying to trade lower here, and I think I'm not really sure exactly, but the numbers should be out. Let's see, take a look here at the numbers for the UK. Manufacturing PMI, yeah, so it's very, very low, right? So the actual number here, I don't know if you can see this, but the prior number was 49.4, and the anticipated outcome was 49.2, but the actual outcome was 48. So the manufacturing sector in the UK is contracting. So no wonder that the pound is trading slightly lower here. And the thing is this, though, in this afternoon, we're probably going to have weak data from the US. So the question is, what's going to happen next year? And usually what happens is that it's a bit of a difficult call on something like GBP USD, but the yen should actually strengthen. And I'm still sticking by that view, but it's going to be a bit difficult here navigating this market specifically. So here, again, if we take out this low, I think we can trade a little bit lower, but I wouldn't get too excited about it. The first sort of sign that something big is happening is if we trade below 27.78, okay? If we trade below 24.78, which is this low here from December 12, 2018. So if we trade below last December's low, then we'll be breaking out from this, what seems to be some sort of a major range. I'm not sure if it's the best interpretation, but we could interpret this like some sort of a rectangle. So the break to the low could potentially cause the market to trade substantially lower. Now, this should not come as a surprise, as most likely Boris Johnson will be the next Prime Minister of the UK, and he's going to play tough. Well, he's going to be very tough, I think, with the EU, and that's just going to scare the markets. And I think people will most likely sell some pounds on the back of that. But until we take out the low, there's no real point to speculating about that because we're trading here right now, but we could be trading up here at the midpoint of this range. So I see no reason to speculate here. The only thing that could be interesting is this little head and shoulders when we take out this high. But again, with the range bound markets, it's sort of very difficult. Now here's the GBP dollar versus the Japanese yen, and the dollar versus the Japanese yen unfortunately moved up far more than I thought it would do. It gapped up upwards, and in my case I was actually stopped out. I closed that position out manually yesterday. I won on 844, as you might remember. I was short from here and then got into a bit of profit, and then it went upwards. Now if you look at this from a daily chart, nothing has necessarily changed, and the price is again starting to trade lower, but it's going to be a difficult situation again. If the numbers are not bad, stock markets in the US are probably going to go upwards, and if they go upwards, well, the dollar yen would most likely trade upwards as well, and then we just need to see what's going to happen, even though my primary sort of outlook is for lower economic growth. However, though, again, economic data, you can have bad economic data, the market still goes up, especially S&P 5, 6, 7, 10%, and then it goes lower. So we just need to be very prudent here with the money management here, and not really just accept the loss, not really getting too attached to it. A good example here is, for example, gold or crude oil prices, which we're going to talk about next. Then we'll talk about gold. So in the case of here, and sorry if you're watching, but there's it's a nice gentleman that reached out to me, and he was bearish and he was short crude oil prices, and he was short from pretty much up here as far as I understand it, and he was asking me what I think is going to happen. So I said, look, we're within, he asked me about here somewhere, and I said, look, we're within this range, and I said, if we trade to the upside, we're probably going to go upwards and trade to the levels where we are right now. On the other hand, if we trade lower, then we're probably going to check out the low here, then we're probably going to trade much lower. So treat this as a range, I said, and just use your stop loss orders. However, the gentleman did not do that. He actually stuck with the position. He was asking me several days here, but obviously the price was just trading sideways, so I was telling him the same thing. It's bullish here, bearish here. Now, what happened eventually is that he stuck with the position until it was here, and he was still asking me, what's gonna happen, but what do I think about the market? And I said, we're probably gonna go upwards. Yeah, we're trading up here, and the last time I spoke with him, I think it was the 21st of June, and since then, again, the prices continue to go upwards, and as far as I know, he didn't take that loss. And it's really important to take losses when trading. If you don't, you're just gonna give away all your money eventually, because it's always gonna be a situation where the market just goes aggressively upwards or aggressively lower, and either you're gonna sort of, a lot of people, what they do is, goes up a bit, they sell some more, goes up a bit, they sell some more, and then eventually pulls back a little bit and they get out. That's very, very typical for people to do that. But that is also, I think, the number one reason, not the number one, but one of the reasons why 72% of traders, up to 80% of traders lose money when they trade. They actually lose money, and that is, I think, because they refuse to accept losses. And something I'm good at, not that I really enjoy it, is the actual we need to take losses. If we don't take losses, we're gonna be like in the situation of this gentleman here. I don't know, I haven't spoken to him since then, but hopefully he's doing all right. So remember that, and that's why, for example, I took the loss in dollar yen, even though I personally think if we're trading at 107 in the next few weeks, that would not surprise me a bit. So in regards to gold prices, so gold prices are bullish about 56.62, and we talked about this last week. So what happened just before the close on Friday is that the market swung all the way back to the buy zone, and then it bounced upwards. So if you had a limit order on here, congratulations, you'll be in a nice little decent profit here. In fact, you will be up with more than your risk, which is really what's important here. Now going forward here, we took out this high, and I think we can continue to trade up to 61.34. I think that makes sense, and there's nothing bad with booking a bit of profits. Where we are, and maybe the rest somewhere up here. As I've been saying many times before, the outlook for this market really depends on what you think is going to happen in the Middle East region. I think so, because otherwise, I think what we're dealing with here, this is overall a bit of a tricky market as well, because as you can see here, the market is sort of long-term bullish about 42.57, and then you have short-term resistance at 66.45, and then you have these highs here. Should we be trading much higher, much lower? I'm not really sure. I think most people think that around 70-ish or 60-ish, that's sort of the fair level. So technically here, if we have a very, very long-term view, then yeah, okay, bullish above here, and we're probably gonna go upwards maybe to 111 at one point, but that's probably gonna take some time. And because of fracking and the ability to produce sort of shale oil, as soon as we go up here, all those rigs, especially in the US, are gonna start to go up, like more and more of them, and that's just gonna limit crude oil prices. So personally, I think 70, so around that level should be sort of a fair level. Then we'll just need to see what happens afterwards. And technically here, it's not the ideal situation because you have resistance coming up, so it's not super clear. It's not like gold or what gold used to be. Let's see if gold survives. I hope it does. So here's multi-year sideways pattern, right? And we took out these levels, which are 13.75. This section here can be interpreted like the ascending triangle. It could also be interpreted with this being the head and this being the left and this sort of being a double right shoulder. Both of these patterns give targets of 1,600 and 1,700. And then just a bunch of other people are sort of saying, well, isn't this a cup and handle? Yeah, that's could be interpreted as like a cup and handle as well. So suddenly you get multiple targets and they're all sort of pointing upwards. Macroeconomic, again, with the Fed cutting rates, it makes perfect sense for this market to trade upwards. Now, because the markets are a bit volatile, and they are what they are, I think here I'm going to remain bullish, but obviously we can have quite a significant correction. Now, in the bigger picture, as long as we trade above something like 1,320 in this section here, it should be perfectly fine, and we're probably going to go upwards. However, though, like, what I did last week, right? So I turned bullish from up here, right? Now, because we had to split up the range, we just had to do it. There's always in any range, on any trend, there's the long-term trend, the medium-term trend, and then it's the short-term trend, and then there's the ultra-short-term trend, right? So the very ultra-short-term trend is obviously clearly bearish, as you can see here, right? But then you have this trend here, which is bullish, and that's sort of what I'm working with. And the idea here last week, and continues to be the same view actually, is that we need to split up the range here. So treating this as an interval, and then this down here as an interval. So if we trade below 13.75, which is the level I spoke about last week, then yeah, we're probably going to go down, up, and probably a little bit lower, and then we'll see what happens. As I said, if we trade above these levels, the market should technically be able to go upwards. But in my case, again, you need to split things up here sometimes, especially in these situations, because if you didn't buy on the breakout, if you bought at the breakout here, which we talked about actually in this presentation, then obviously you're back almost a break even. So that's fine. You can still keep your stop loss down here. But in my case, because I didn't buy the original breakout, because the breakout happened in the middle of the night, and I try not to buy overnight markets, I had to buy a pullback. So I bought pretty much here in the middle. With you guys, I shared that we should buy here at 1404, so pretty much same levels. And the only way to sort of justify that is to say we need to work with stops down here, because otherwise, if we buy here and stop goes down here, then we just ruin the whole risk reward ratio. So as for this going forward, again, we got that massive reaction here, which again I think is a little bit exaggerated. and it could potentially be a very good opportunity to buy some gold, especially if the data comes out bad with the ISM today and then the NFP on Friday. On the other hand, if the data would come out really strong, it could easily just push price below here, and then we'll see what happens, but most likely get all the stop losses out, go a little bit lower, and then eventually higher. S&P 500, all right, so this is becoming interesting, right? So obviously the market gives, the market takes, right? So what happens here is that if we're totally wrong with the situation, say economic data is actually going to improve going forward, the slowdowns we're seeing, for example, in the UK are sort of short-term in nature, and we're going to see better data going forward, then maybe, you know, we're probably going to see maybe markets going upwards. Again, it's not what I think is going to happen, but if that's the case, then as you can see here, the S&P 500 is now trading at a new 2019 high, which happens to be a new all-time high. And there are different interpretations here, but you have a low left right shoulder type of setup, and then you have just a break sort of to these levels here, I think. So if you look at it from that perspective, yes, we have not triggered that, but I think really the break we had today could potentially be it. And then the difference here is 27 pip move. If we look at this from a slightly less aggressive perspective, we just sort of treat this as some sort of a range. So from here to here, then you get less aggressive target, which is probably better. And then suddenly you still have these sort of 391 point move and 640 point move. And this could be, you know, if we get that deal done, it could be something. But let's see what happens over the next few hours. As for the trend, you know, we never traded below this level. So the bearish scenario I shared with you last week was not triggered. And it's only if we trade below this level that bearish scenario is triggered. And we'll see what happens here. You know, it sort of depends on your view on the world. Again, I am a bit cautious, so I'm going to take it easy. I'm not going to buy anything now. But if this starts to establish itself on the other side here, then you're going to look at a market as breaking out. And it's even more evident in something like the Dow Jones. This is the Dow Jones. So the Dow Jones 30 is clearly in some sort of head and shoulders with a sort of left, right shoulder and head. You got 1, 2, 3 major highs here, right? And this is very nicely well defined. It's just a straight line, much better than the S&P 500. And again, if we trade above here, it could potentially say, look, we're going to rally with 3,600 points up to 5,436 points. And this would hopefully end the stalemate in stock markets, because these stock markets are gone nowhere since 2018. And if we try to trade upwards, we're definitely not going to go in a straight line unless we get that deal with US China, or maybe like a decision from North Korea to give up on their nuclear arms. So it's going to be choppy, but we can definitely tradable. I'm not saying it's going to be very choppy, but it's going to be tradable, and we can hopefully sort of get a very nice move. I mean, maybe we'll go up to something like 3,000. What is this? 30,560. Pivot point wise for the year, these are the pivot points for the year, and they do suggest we can go up to 29,277 without turning overbought for the year. So there's definitely scope for this to trade upwards. So this is well something you want to pay attention to. And if we get the break to the upside, we'll just need to see, and we'll see what happens, right? Because this is in strong. I mean, it's definitely going against what's going on in gold prices. Gold prices and stock markets should not trade upwards at the same time. It doesn't make too much sense. Okay, that covers pretty much most of the main markets, guys. If you have any questions, let's see if you have them. So we got Ronnie here from Scotland. Good morning to you, sir. How much of a rebound can we see today on the DAX before it continues higher? Yes, I actually forgot about the DAX. So let's take a look at that. We also have Marvin here. Good morning to you, sir. And we have Ashu asking about GBP yen. So let's take a look at that. So I forgot the German DAX. So this is the German DAX, and you might remember that we talked about this one last week. And the idea was just to get involved down here. And it's looking really good, you know, swung all the way back up here. There's nothing wrong booking a bit of profit here. And then what's going to happen next, I think, is that the market is going to trade slightly upwards. So you have this high here from August 2018, which is limiting price. And then you have another level here from July 2018, which is also limiting price. That's at 12,886. Now, how much of a pullback can we have? Well, we can just use the fib and use just common sense. And I can tell you that if you didn't buy down here, I think maybe this high is probably the better option. Fib wise, you can just put the fibs. That would be your first fib. So that is where I will look to get involved again if you wanted to get involved in this move. Around that level. So you're looking at something like 12,452. I think that would be a reasonable level to anticipate this to bounce. And now we can see we can quickly reduce this to alternative funding levels, this level here. So I will book half of the profit, half of the position here, and then one can buy back the whole lot here, the whole position. Alternatively, just reduce stop loss orders, and then you see what's going to happen. We'll see what's going to happen. I mean, obviously, I'm not sure exactly how it's going to work out, but I have a feeling it's going to trade higher rather than lower, especially with the S&P doing what it's doing. But let's see what happens. In fact, let's take a look at some of the data today. So you have Chinese CAC manufacturing PMI printing 49.4. So manufacturing sector, the private sector in China is still contracting. You have Japanese manufacturing at 49.3, so also contracting. And then you have the Tankan, which is sort of the main PMI figure for Japan. That's also not doing that good. As for even Turkey is at 47.9, Spain 47.9, Switzerland 47.7, Italy 48.4, France 51.9, which is not that bad. And then you have the German one, which is at 45. So it's not good numbers. As for manufacturing manufacturing PMI for the whole of the euro area, the outcome is 47.6. Let's actually take a look here. So we have this section here, by the way, calendar on Investing Cube, and so let me see if I can find it here. This is the European. Oh, this is not European. It's, here we go. This is Euro area manufacturing PMI. Forecast 47.8, actual 47.6. So you can see how manufacturing is stabilizing here, but there's a big, everybody's sort of saying, oh look, the Fed is going to cut rates, that's going to boost eased monetary conditions, so money's going back to stocks. But at one point, the economy and stock market indices need to sort of reflect each other. So it's not looking very encouraging here. As for the ISM then, which is out today, the forecast, oh that's interesting, sorry, the forecast is 52.4, so slightly upwards. Market PMI was actually, which published I think 2 weeks ago, was actually slightly lower. So this is out in 5 hours time, and we need to go down quite aggressively. We need to go down to I think 42.5 before there's a recession in the US. But we still, this is still anticipated to go lower. And again, contraction in the manufacturing sector. Okay, we got a data, not a data, I got a request about GBP yen, so let's take a look at that. I haven't looked at that one for quite some time. So this is GBP yen. So the market is trading sideways here. So I wouldn't get too much, I wouldn't get too excited. You have 138.43, which is limiting price. The problem here though is that the market, I mean the trend is bearish, but the issue here is that the market slid from these levels. You might remember this is actually something we talked about, and the market declined. Declined much better than I thought it would decline, but it did decline. And right now you're dealing with some sort of a range bound market here, which is all fair. After any sort of big move, the market usually needs to rest. It's a little bit like the human body, right? After a big night out or just working really hard for a week or two or whatever, very hard day, we need to rest, right? So it's the same thing here. This is just resting right now. So I would not get too excited. The market could either be bullish or bearish, and it can really just go either way. So I got a question about the Aussie dollar. So we just one question per person. If you want to know actually about the Aussie dollar, I can do an analysis for you, but I'm gonna write about it. So Investing Cube is obviously the new site here that I'm managing here, and there's good reasons to become a member. Firstly, it's all free. Number two, you can access content that we have produced. So we have the quarterly report coming up soon, but what's going to happen here is that some of these, right now everything is open, but about a third of all the all reports are going to be locked, and it's very straightforward. You just become a member, and then that's it really. You have access to it. I'm just looking for something right now. I can't actually find it because we don't have a lot of lock articles. Let's go here. Quarterly market forecast. A bit slowly because I'm broadcasting at the same time as I'm trying to access the page. Here we go. So as you're gonna notice, alright, it's loading really slowly. There we go, finally. Some of them are gonna be like this. This content is free memberships only, and you just need to click on register and just sign up. As easy as that. So I suggest you sign up, and I'll send you the link, and then pretty much I'll write the article for you, and you can enjoy that. So I'll send you the link here. There you go. Okay guys, I think we want to wrap things up. Thanks so much for watching, and thanks so much for your continued support. I know some of you guys have been watching this for years, so I want to thank everyone for joining in. Don't forget to hit that like button. So just click on the link there. Then there's a little button here. It's really important if you like it if you like the presentation, that you actually like it as well. Okay, thanks so much for watching, and I'll see you guys tomorrow, same time here at Investing Cube for the latest market update. Thank you. Bye.